Hey, good morning. Or good afternoon in Australia or Japan and all the viewers across Asia. Good morning to Europe and the UK. First of all, apologies for Friday. I never managed to get a driving market out on Friday. I was just simply too busy and never got a chance. So let's have a quick catch up on where we're at. So the UK inflation, let's talk about that. That came out on Friday at 9%. I still think it's really understated. The Bank of England has said that by October, inflation is going to be 10.2%. Well, actually, I would suggest that by July, inflation in the UK is going to be 10.2%, not by October. Real inflation in the UK, as we all experience and everyone's experiences, is running at around about the 25% level. That is real inflation, not the quoted inflation. So anyone who says, yeah, they've got the numbers right, yeah, the economists are right, yeah, the analysts are right, don't believe them. I just don't believe them. It's wrong. The measure of inflation is too narrow, and everyone, when they go shopping, whether it's to Tesco, Sainsbury's, or Walmart, or Walgreens, or wherever you are around the world, you can feel that the real inflation is not 9% and it's not 10%. It's running at the 25% level. Now, interest rates in the UK are going to have to significantly rise. There's no way you can keep interest rates or increase interest rates by 25 basis points a time. It's not going to happen. There's now more pressure on the MPC, the Monetary Policy Committee of the UK, to increase rates at the next round by at least 50 basis points. Otherwise, the fight against inflation is just simply not there, and they're wasting the time and they're misleading and misguiding the whole of the UK population. Remember, we do have full employment, so that is a big fight against recession. But the way the market's going at the moment and the way there is lack of liquidity, then the recession is on the cards, and the central banks are simply not taking enough action, as I've stated over and over again. What was interesting is that on Thursday, the pound shot up against the US dollar on the back of a 9% inflation number, which means that the markets are expecting higher interest rates. I don't think the pound is going to go much higher against the US dollar in the near term. I think the dollar has the upper hand, and it looks like the dollar is going to be the strongest currency amongst all basket of currencies, all majors and minors. Just talking about foreign exchange then, if we've moved on to that. The euro dollar. So the euro dollar looks like it's going to go to 1-on-1. That means it's going to be €1 to $1. Less than 4 months ago, we were talking about I think it was 115, 119 was the euro dollar. But now you're talking about 1-on-1, even less than 1-on-1 on the euro dollar. The euro looks like a big sell on that particular pair, and also looks like a big sell against any pair, in my opinion, because the ECB, which is the European Central Bank, is just not willing to raise interest rates at all, and that is pushing the euro down to near all-time lows in more than 20 years. So the moment the euro is about the 105 level, you'll see it in the next 30 days go down to about 101, 102, and then from there probably go down to 1. Therefore, the euro is a sell. Looking at some shares, you've got the big sellers, in my opinion, of Facebook, Tesla, and Amazon. Tesla's dropped below the 700 level. I did say it's 720. It was a buy short term and did move from 720 up to the 770, 780 level, and now on Friday closed at 663. Not that I don't like Tesla. I actually like Tesla. I love Elon Musk, and I think he's great. However, with the pressure overall on the NASDAQ and the tech sector, you've got pressure on Tesla, and Tesla's likely to go down to about $550 a share, around about there in the near term. Take Amazon. Amazon's got major supply issues in China, and Amazon's probably going to miss its profit line again. It closed on Friday $2,100, and it's probably going to float all the way down in the near term to $1,500. That's a 50% drop since January, more than 50% drop since January. Facebook, well overvalued, needs to be sold. It's 193. I think Facebook should be around about the 120, 110, 120 level. It's just simply too high. and then you've got Apple. Now, Apple is actually a solid producer of profits, but due to market sentiment, it's come off. It's now not the most expensive or the most valuable company in the world. It's been surpassed by Aramco, which is the Arab oil company, and 137. Apple also is probably going to float down to the 115, 120 level in the near term. Overall, the trend of the markets is down. I've been saying since January, sell the markets. And anyone who has sold the markets and stuck to that should have made some money. And the markets are going to trend further down because inflation is out of control. In fact, the 10-year bond, the yield dropped all the way down to 2.79%, indicating that the investors are very, very nervous and they're pouring the money into bonds and therefore pushing that yield down by raising the price of them. And there's a big race for safe havens. So the US dollar is a safe haven and US 10-year treasuries are safe havens. The 2-year treasury also is yielding, so is also being sought after, and that yield has dropped significantly on the 2-year note, so something to keep an eye on. The other thing to look at is Bitcoin, the crypto area, and the debacle and the fiasco that's going on with stablecoin, Luna, and USDT and Terra is an absolute joke. You've had billions, close to 80 billion wiped off in value just in the last week or so, and that's caused significant call on margin because there's now no stability in the stable coin. The word stable doesn't apply to stable coins, and that was the original idea, but the stable coins have completely collapsed, causing Bitcoin also to fall further. So what you've got Bitcoin likely to fall to around about the 20,000 level. Now that does not include the MicroStrategy share company that's holding 129,000 Bitcoins, and it's going to be on a margin call soon if Bitcoin falls below 29,000. Their average in price is $45. And if it falls below 29,000, then MicroStrategy will have to liquidate or add huge amounts of money to support their leverage position on Bitcoin. They've stated they are not interested in selling any Bitcoins short term, so they're going to have to come up with a hell of a lot of money to support Bitcoin because Bitcoin is on the way down to 20,000. I don't think they'll be able to keep on holding it at that level. So Bitcoin overall is down and going down. What to expect further in the week? Probably more extreme volatility. So be aware that if you're a day trader, make sure that you're trading by the minute and by the hour and not by the days. If you're a swing trader, then overall the market's going down. Then you can catch me on Instagram. I do regular reels on Instagram several times during the day. On Twitter, I'm passing comments all the time. And obviously on YouTube, subscribe, likes, follow Driving Markets. Have a good day.